Happy Wednesday, Asher here with your midweek market update, and there is a ton to talk about today. We've got big news from Fannie and Freddie, home sales are going in two different directions, and a few signals that rates could move in our favor soon. So let's break this all down in some plain English. First up, Fannie Mae and Freddie Mac stocks exploded this week. Why? Well, President Trump said he's considering taking them public again. That's huge because it could mean the end of the conservatorship, which is the government control they've been under since 2008 crash. Naturally, everyone's asking, if that happens, will mortgage rates go up? The good news is, probably not. Even if they exit the conservatorship, there's talk of keeping a government backstop in place, something called an implicit guarantee. Basically, that means that the government would still step in to stabilize things if needed, and that keeps mortgage rates from spiking. So, this headline sounds scary, but for your buyers, it likely changes not really much for now. There's also a behind-the-scenes move to ease bank regulations, and this one could actually help lower rates. The idea is to adjust the rules so banks can hold more US Treasuries without being penalized for it on their balance sheets. Well, why does that matter? Because when banks buy more Treasuries, it absorbs some of the supply, and that can put downward pressure on the 10-year Treasury yield, which that's what our mortgage rates tend to follow. One expert even said this could shave 0.1% off rates and help bring us closer to the low 6 range. No promises, but hey, it's nice to hear that people in DC finally talking about narrowing that spread between treasuries and mortgage rates. Rates moved just a tick higher this week, sitting right around 7%. That cooled the refinance activity a little bit, but here's a surprise. Purchase applications actually rose 2% from last week and are still up 18% compared to a year ago. So buyers are still out there, they're making moves, and especially as more inventory hits this market. New construction is carrying the load right now. New home sales were up almost 11% in April, and we've got more than 500,000 new homes on the market. That's an 8-month supply. Builders are offering incentives, flexible timelines, and your buyers are responding. Meanwhile, existing home sales, they continue to struggle. April was the slowest we've seen since 2009. High rates and seller hesitancy are still holding that segment back. One bright spot, consumer confidence jumped this month. People are feeling a little more optimistic thanks to some recent de-escalation on the US-China trade tension. It's not everything, but it could help get buyers off the fence heading into summer. Also, FHFA is putting pressure on FICO for raising the price of credit reports, and they're planning a big shift. Starting later this year, Fannie and Freddie will start using bi-merge credit reports instead of tri-merge, and they're switching to newer credit scoring models. Well, what does that mean? Hopefully, cheaper credit reports, fairer scores, and better access to financing for your buyers. More details to come, but this could be a big win for affordability. Looking ahead, the big report this week is PCE. It's the Fed's preferred inflation gauge, and it drops on Friday. If the monthly number comes in tame, it could be a nice boost for the bond market and possibly some relief for mortgage rates. We'll also see the Fed minutes today here in a couple hours, but those usually don't move markets unless there's a surprise. Tomorrow we'll get the GDP and pending home sales, and trust me, I'll be keeping an eye on that too. So overall, some pretty interesting shifts this week. We've got some new home sales rising, we've got purchase activity holding strong, and the chance for a better mortgage pricing if these policy changes move forward. If you've got clients who are on the fence, let's talk strategy. And as always, feel free to share this with anyone who could use a no-nonsense breakdown of what's actually going on in the market. That's all I got for you today. Follow for more weekly updates and share this with a fellow agent who might need the inside scoop.